Hello. It's a beautiful Sunday evening. My time is around 5:42 p.m. and this is the first out of many weekly forex breakdowns. So on today's video or topic, I am going to break down my thoughts for the week and what I think the week will go. How do I process trading forex before the week starts? How do I prepare to trades that I want to take for the week? And of course, I haven't introduced myself as usual. I keep forgetting. My name is Simon. Welcome to Free Value FX. This should be video number 6, but it's actually the first video on my weekly forex breakdowns. Since this is the first, I'm gonna try and make it slightly longer than usual, or maybe shorter. It will depend on how I go. I'm actually freestyling this as usual. I have no script because I'm just showing you my forecast, my analysis, and how I process my weekly preparation for forex. Yeah, so I'm going to talk about famous pairs as well, stuff like gold, silver, and the dollar, and how the dollar is related to other pairs like USDJPY, USDCHF, and other of the sort. I might touch also about indices, crypto, and other minor pairs that people are usually follow up on. Yep, so I hope this video is enjoyable for you and you'll be able to pick up a few setups for your trading journey this week. Yeah, I'll try to also run. You'll be seeing me talk about the concepts that I spoke of in the last 5 videos. So click the link that should be appearing just right now at the corner of your screen. It will take you back to the playlist that runs you down through all the 5 videos that I posted concerning trading and my strategy and etc. Without further ado, let's get going. So basically, I usually start with the dollar. Why do I start with the dollar? Because at least when I know the picture of the dollar, I I get to know at least what other pairs would do, because there are lots of things that I look at, but majorly I focus on 3 things. I focus on the technicals. Yes, so I focus on 3 things. I focus on the technicals, which, as you can see, the charts. Then the fundamentals. Fundamentals is basically, the news, anything that is not chart related falls into the fundamentals category. So the news and information that is talked on in the web and whatever, because believe it or not, these ones, they really do influence how the market moves, especially when major powers of the country, of the nation, of the world, sorry, major powers of the world talk about a few things here and there, like big companies, presidents, if they are like ongoing world events, geopoliticals and whatever, they all fall into the macros category or the fundamentals category. And then we also have the sentiment. Now with sentiment, I termed it all together as sentiment because in there I also do add signal strength. So like signal strength means certain currency indexes, let's say the euro or the dollar, have relative strength against one another. So for me to get a definitive setup, I usually observe how the relationship between the 2 currencies in a currency pair behave, because if one is stronger than the other, then I know the setup is more likely to play out. If one is weaker than the other, I know the setup may or may not play out, or if they have like close strength. Of course, it's a new idea that I picked up and experimented, I think last year, and it has proven to be somewhat good. Yeah, so So I'm gonna start off with the technicals, and I'm just going to brush you through quickly what I do. So as I said, I'm going to start with the dollar. So the framework will be the dollar, and then I'm going to talk about the dollar in relation to the major currency pairs. So that is Aussie dollar, New Zealand dollar, and then we have the USD CAD, USDJPY, Euro dollar, and like that. So like USD Canadian dollar. And then after that, I will touch on gold and silver, and then just hint on a few things on on crypto indices and other miners that I want to pay attention on. Yeah, so with the dollar, let's get to the dollar first of all. This is your dollar chart for the year 2025 through 2026, and as you can see, it's on the daily time frame. So the dollar peaked at some point in time here, if you can see well. Yeah, so that is January 9, 2025, after having moved higher like that. And then from this point it was at around 109, close to 110, and then from there we see it picked up like a bearish momentum all the way towards this low here, these lows here, which is like around the level of 95. Let's mark 95. So from 110 to 95, and then between this point towards where it is now, it has been consolidating. From previous videos, you've come to realize you're seeing a pattern that I've talked about. So that is the consolidation pattern, and the consolidation pattern, as we said, it is marked with let's see here. Do I have a drawing tool? I don't think I have a drawing tool in this, or maybe I do, but just can't see it. Yes, so as I said, you've heard me talk about the patterns that we discussed in the couple previous videos. So we have this bullish trend above right there. I am not so good at drawing, so we shall see. And then we have this bearish trend. Oh, I should lock this. Yeah, this is locked. Yeah, it's locked. And then we have this bearish trend right there, this one, and then we have this consolidative trend right there. So three of them, the bullish, the bearish. Now, but this bullish trend was a while, as I explained. The bearish trend was also a while. Now, if you observe, we are in some sort of a current consolidative trend with equal highs and equal lows like that. So what did we say concerning this patterns, charts, whatever? Since we're talking about the dollar, this has a huge effect towards like across other markets. But if we were trading the dollar, this would be slightly not in our favor. But for those who are looking to trade, consolidations, since we know now it is at some sort of a high, we would be waiting for the dollar in such to break that high. So this would be the high in question right here. Let's put it there. This will be the high in question. So if I zoom into current price action, this is your consolidation on the left side of the screen, and this is the high close to the question. Now, I also insisted on marking your parameters. Good that you've remembered that. So if I was to mark my parameters, this here is a fair value gap, a beautiful one, and it is not used. And we see that price has been moving in a manner from the lows that have happened over the previous months. Price has been moving up from these lows. We see a sweep from this swing low right here. Let me mark it as well. We see a sweep from this swing low there, and then now after the sweep from this swing low, we see price moving upward towards primarily, or maybe this high right here, after dealing with this high right here. So We don't know. Of course, we are also still assuming that the week picks up volatility. We may get something like this. Price moving into this fair value gap like that. Let me get the path tool. Yeah, so price moving into this fair value gap from the point in time into the fair value gap, and then, you know, skyrocketing like that all the way towards the highs right there. We could get something like that for a bullish dollar scenario. And for a bearish dollar scenario, this is when now, if you remember, we talked about the failing fair value gaps issue, whereas you have price getting in the gap, but it fails to push it above. So instead, what happens is you get a little push and then a dump all the way towards that low. Let me change this to green. Yes. So these are my $2 scenarios that I'm currently eyeing on. And if we and if we are keen enough to observe the news events that are to happen next week, maybe we would say there are some good events that would cause the dollar to behave in such. We have not so many, but just a few important events. I'll pull them up on my screen later on, of course. I'll pull them up on my screen later on. These important events, we have the CPI on Wednesday, we have on Thursday, we have an employment change, and on Friday, we have the JOLTS job openings. These events could add more volatility to decide on either direction, depending on how much they would relate to the dollar. Of course, there's a separate section for the fundamentals, which I'll just wrap everything up and I'll explain. So this is my bias for the dollar. We're still in between. As you can see clearly from the charts, it is very hard to give a direction for consolidating chart. We can only assume that price will only use this fair value gap here, you know, to decide whether to, you know, go low towards these lows or push high towards this high, and ultimately this high. Yeah. So in relation to the dollar now, if I'm going to pull up my majors, for example, let me start with the UJ because I trade UJ strongly. So with UJ, we have, see how it looks slightly different because with the ongoing events happening, and remember I'm showing you this in the daily because yes, I'm a day trader. I trade each candle as a day. So once I see a setup in the daily time frame, I would scale lower to the 1 hour and you know, I scale lower to the 1 hour or 15 minutes to get setups in my particular sessions that I trade, particularly Asian session or New York session. Yeah. So what do we see in the dollar? As usual, in the Japanese yen, sorry. As usual, we have to mark the parameters. So we have a swing high right there in red. We have a good double bottom for swing low right there below. I'll put it as green. I'm putting swing lows as green and swing highs as red because mostly swing highs offer more bearish setups than bullish setups, but it also depends on the scenario. Please visit the video where I explain concerning, you know, executions and yeah. But in hindsight, or roughly, let's say for example, a sweep would be something like this. If we want to sell from a swing high, we would get something like this: pull up and then okay, let me just delete that. Good. Now a sweep will be something like this. A sweep will be from where price is right now. You get a strong push above, and instead of, you know, closing above and continuing like that, it just tanks. You understand? That is a sweep. While a run would be something like this. A run would be something like this. Just a straight close, strong close above, a little pullback, and then continue. This is a run. So for those who like, because I'll be saying run sweep for most of the times. Yeah. So now we have this ultimate swing high that I marked at 159.53. And then we have this swing low at 152.114. And then what else do we see? We see fair value gaps respected at this point in time. We have this one, This one not so much, but we have this one as well. And then in the course of respecting these fair value gaps, we have this bearish leg here failing. Now, as I said, a bearish fair value gap failing would be if it fails to pull price lower, and this is exactly what we see here. So the week ended with a beautiful bullish fair value gap being respected, as in this chart right there. Pop, pop. See, this is the respect that I was talking about in previous videos, where you have price wicking in once and then leaving. But you would argue that the price leaving here is still not so weak. So even though I have UJ as my bullish setup for the week, let me just write it up there. Put up. Yes, so even now, even though I have my UJ as bullish for the week, boom, boom, 40. Even though I have UJ as bullish in a sense that I'm expecting it to, you know, keep momentum to at least these highs before we decide if it's continually bullish, or maybe we will get a sweep from this high towards these lows over here. Overall, I'm thinking it's still bullish. And if I'm thinking it's bullish, I would definitely go lower time frames, particularly the 1 hour, and then look for setups that send me to that direction, either the 1 hour or the 4 hour. And to be honest, I'm not seeing any. I'm just seeing lots of spikes. This is the bullish leg. Oh, I'm seeing this is in the 4 hour. You notice there are a couple of fading fair value gaps in that leg as well. Here, for example, this bearish fair value gap failed, and you see how it failed. After it failed, immediately, like, price pushed up. Like, you see it wanted to like push below, but it failed, so pushed up. This would be a beautiful setup if I took it on the, you know, Monday, February 23rd. This as well would be a beautiful setup, but the failure was not giving, so, but it would also be good. And yeah, so that's how I just look at it. But looking at current price action, there isn't any setup for me in the 4 hour. So if I zoom lower to, let's say, even to the 15-minute, I would also see that there isn't any setup for me to take. So just wait for market to open. As you can see, this is like some sort of, you know, consolidation bubble or whatever, something of that sort. This one, there you go. So in this consolidation bubble or whatever, I would only wait to see if these highs are broken, because when these highs are broken, because this is a swing high in the 15-minute, if it's broken, you know, if it's run, yeah, then you would expect price to continue above in that manner. But in the meantime, I know or I think UJ is bullish to some extent, and I'll be waiting to see bullish setups. If I don't see that 15-minute break or a break of these highs right here, then I won't take it. I won't take the setup, or I'll change my idea to bearishness. And other USD pairs would include the euro dollar. So let's see what we see here in the euro dollar. Good. The euro dollar has been bearish for a while. It had a spring of, you know, consolidations right there, and then we have spike up, almost like a fake out, and then we see this bullish fair value gap here failing. So the reason I'm pointing out, or I'm showing you failing bullish fair value gaps, failing bearish fair value gaps, because I think it's like to make you see what I see. See, so after seeing that this bullish fair value gap failed right there, and then price assumed some sort of a bearish trend like that, so it tells you something. So let's do the same thing. Let's mark parameters. So we have a swing low right here, we have a swing high. Let me mark it swing high, which is right there. Mark the swing high in red as usual, and then let me zoom it clearly so you can see this current price action. Lock it like that. What else do we see? We have beautiful fair value gaps waiting to be respected and whatever. So we have this one right there. It's a bearish one, so I'll mark red. Red. Yeah. So at this point in time, I think, okay, oh yeah, good. And we have a beautiful swing, a previous swing low that has been dealt with. This here is an example of a swing low being swept. You see how the body is closed just above. You understand? The body is closed. And when I say body and wick, see this huge red thing is called the body, and then this tiny little thing is called the wick. So you see how price wicked once, twice, third, leaving a new swing low right here. So this swing low has been used. We're not going to use it again, but this is the swing low of target. If I see price coming all the way to this low, let me take the path tool now to explain what idea am I waiting for. So I'll be waiting for this. If I want to wait for buys, I'll be expecting price to take out this swing low and then push all the way above towards the following places, maybe towards this swing, towards this fair value gap, then reject because new fair value gaps will be created at this swing, and then, you know, continue higher. That will be my bullish setup. That is 1. 2, if there are no any bearish setups in this point in time, if there are no any bullish setups in this point in time, I'd be expecting this swing low to fail. In what manner? So where price is right now, price will just pick up to the fair value gap and then close all the way below this swing low. That is 1. 2, you would have something like this. Price wouldn't even wait for you to you know, go to the fair value gap and whatever. So it would just run the swing low and then go low. So now I have 2 bearish ideas and a single bullish idea happening. So what I do in this, to be honest, this is how I just leave my charts. Later on when I want to come and take a trade, I just look at this and then see what direction has played out or which bias has played out based on the drawings that I made. And then I'll execute. Yeah, most times I just put alerts, but since I haven't paid for the premium version of TradingView, I can only just wait or put alerts on a separate application or in my laptop on MetaTrader directly, and then we can see. So roughly this is the EURUSD. What about the AUDUSD quickly? Yeah, because I think I'm running a bit out of time. We see the AUDUSD has been consolidating for a while. See, with consolidation, you would know that there is no movement. There's no movement. You see this? Bullish leg, consolidation. Consolidation is very obvious at times. Doesn't even need you to use much of your brain cells. This whole year has been consolidating for AUD, and I remember losing a couple accounts in this run because if you look clearly, this would look like a bullish. Sorry, let me mark it. This would look like a bullish run because it's going up, but in real sense, you're not getting any setups in this. No fair value gaps are working. No swing points are used. You're just being cooked left, right, and center. So not advisable to take. But this typical consolidation pattern, avoid as much as you can, unless you're very skillful and you know what to do with this. Yeah, so that's AUDUSD at this point in time. We do have fair value gaps as low as this point, but we expect price to come as this low and as low as possible before going up. So not a good setup for me. I just put it aside. The New Zealand dollar as well. Yeah, so strength wise, the New Zealand dollar has been stronger than the Australian dollar at some point. So since it's the same region, like New Zealand, Australia, you would expect them to both consolidate. But for the New Zealand dollar, it didn't. Like you'd see also that means the Australian dollar was stronger than the New Zealand dollar, in a sense that it was weaker now. That's why you see bearishness on the New Zealand dollar and you see consolidation on the Australian dollar. I think I'll have to put a video on the side just explaining everything about currency strength and how to market on that. Setups we see on the New Zealand dollar is only if price would come to as low as this daily bullish fair value gap right there. I have to change it to red. And if price comes to as low as that, you get a setup. You'd realize now that I'm not even using or putting many things on my chart. It's either a fair value gap or a swing point, and then I'm done. Because I don't want my chart to be, crowded and cause overload of, setups and symbols and whatever. So I'm just looking for a fair value gap involvement or a swing point involvement, and then I'm gone. And USDCHF, I don't think USDCHF, okay, good. So USDCHF was actually beautiful. Maybe some money last week or a couple weeks back, I don't remember. We'll start with the weekly, because the weekly was interesting. Now, since I said it made me some money, I'd have to show you how it did make me money. So I charted a bearish fair value gap in the weekly at this point in time. It was, I just did this pop. Then after doing that, I said, okay, so we have this fair value gap. I think we were at this point in time. And it was the first week of February. So price had gone in, tapped the gap in the weekly time frame. So I knew for a fact that the rest of the week is going to be a bearish one. Took some few bearish setups in that week, golden. And then the next week, we saw a response to that. But see, observing in hindsight now, this is pure consolidation. Because the CHF and the dollar have somewhat close to relative, strength. You understand? But what is interesting is when price gets in a fair value gap, it leaves behind a wick. See, like this. So this week is what I call a rejection high. Let me just write it down. A rejection high if it's for a sell setup, or a rejection low if it's for a buy fair value gap. So in this case, it left a rejection high. This rejection high also serves as a swing point, swing high or swing low, depending on how strong the gap is, or how strong the volatility is in that pair. So in this week in time, I said, okay, if we get a sweep, this one here, first week of March, if you get a sweep from this week, from this rejection high, we'll definitely tank downwards like that, which we did. Took a while, but we did. So you go to your daily now, and you see the exact same thing. You see the sweep happening as a result of, responding towards this point here. That was the rejection high. So price was supposed to push above. It didn't. It respected this point. So at this point, price is entering this fair value gap here, this daily fair value gap, bullish one even. So we said that a higher time frame is stronger than the lower time frame. So if I was to ask you now, which setup would you hold dearly? Would you hold dearly the weekly setup or the daily setup? Your answer should be the weekly, because the weekly is stronger than the daily. The daily is stronger than the 4 hour, 4 hour stronger than the 1 hour, etc. as you go. So that's one time frame. Two, look at how price is responding towards this fair value gap right there in that point in time. It's not a strong week in, week out. You understand? So it's just pop like that, closing in the gap. I suggest Monday would be interesting for this pair, because we would see the following. We would see one, since this candle has entered here, I would mark this as a rejection low as well. Rejection low for the fair value gap. Let's just mark it. Bam. Then we put green, because it's responding from a bullish fair value gap. So these are my two theories for USDCHF. If we open price and you know, we sweep this just like that all the way. We're seeing now bullish setups like that. If we do that, if we don't, we could see consolidation. Why could we see consolidation? Because of the relative strength between the two pairs, the dollar and the Swiss franc. That's one. If we don't see consolidation, we would downright see a close below, a strong close below like that, and then a slight pullback, then come back all the way to this low. All this is possible. Do I have a definitive answer? No. What am I waiting for? I'm just waiting for whatever price will do at this region in time. If it decides to sweep, we would be going towards this high right here, or ultimately this fair value gap right here, or this high right here, depending on what news is available. If we're targeting this high, let me just do this, mark it, and then say, let me just draw a line. If you're targeting this high right there, I would zoom as low as the 15-minute so that I can observe, because this is the sweep that this is the sweep that we're talking about. Yeah, sweep, then go above. So I'll zoom as low as the 15-minute to see what are we up against to reach towards this high. That's how I take my trades. Simple like that. If I see a higher time frame setup playing out, then I'd know, okay, every low time frame opposing setup, let's say if a bullish setup is playing out on the higher time frame, so every opposing setup, that is every bearish setup on the lower time frame, will fail. So in this case, you have multiple fair value gaps, in this leg. All of these would fail because the ultimate goal would be for price to reach its targets, like, you know, these highs or these highs ultimately. Yeah, I'm not going to talk about USD CAD because it's going to be the same as USDCHF. So that is okay, it's too much time. Yeah, we move on. Now we have metals. See, we have the gold and silver. Gold and silver is interesting for me this week, especially how let me just do this pop up. Oh, just 15 minutes. Okay, let me just daily. Gold and silver is ultimately interesting only based on the fact that we have a working fair value gap to play with. Understand? 2 days have been consolidative. As you see, in face value, gold has been bullish of a point in time. Yeah, good. Now, that is from November to now. It's creating higher highs, higher lows, literally. But interestingly, we could say now it is at a consolidative stage right here. And the consolidation is created by the fact that this bearish fair value gap here failed. This one failed. And we have a run of this swing high, rejection high, whatever, right here. We run it beautifully like that. I'll just mark it. And then from the run, we are targeting the current all-time high. Mark here, I said current because gold usually changes all-time high over seasons. Like, because it's usually every time bullish. So creates new all-time highs every now and then. This is a pattern for gold. Like, even if I zoom back, you will see the exact same thing. You see a huge leg up, which takes days, and you see a sharp turn like that, like 2 or 3 days of bearishness, and then the 2 or 3 days of bearishness create a bearish fair value gap. This bearish fair value gap doesn't work. It usually fails, and then price pushes up slowly again, just like this leg, slowly towards the all-time high. Then you get a sweep, then a strong, then like that. Now, this usually happens because gold, silver, or other commodities are usually regarded as safe haven currencies, especially when we have alarming geopolitical events that happen, especially wars and, you know, calamities, you know, hurricanes, whatever, etc. As of now, we have the US-Iran conflict. I'm not calling it war yet, but it's a huge conflict of interest, of power. I'm not going to talk about that. But this creates some sort of, you know, sentiment or tension over the commodity gold. So what am I waiting for? That is a good question. See, out of this moment in time, we have created a bearish fair value gap right here. This one, yep. I'm going to remind you one more time, a bearish fair value gap is a result of 3 pattern candles. This one being the first, this one being the second, this one being the third. Let me use a pointer tool. Tools, I should have a pointer. Where is it? Anyways, you get the gist. So I wish I was using my laptop. Anyways, so first candle, second candle like that, then the third candle right there. So as you see now, this swing is invalid. We first of all are responding from this bullish fair value gap beautifully, by the way. Not so beautiful, but this week tells us something. Okay, yeah, this week is also a good one to mark. Okay, by the way, I'm analyzing the market with you guys like on face value, so whatever I'm recording is going straight to my weekly setup. Yeah, good. Now, what do I expect? I expect price to do the following. I expect price, because it is very close to the fair value gap, to first enter the gap, and if we get bearishness, sell like that towards this low, and from this low we may get an even more dump. One expectation. Second expectation would be, because of this strong volatility from the Friday bullish candle as a result of the news that was in that day, we would get push up, causing this fair value gap to fail, more fair value gaps to work, targeting either this high or this high, ultimately the all-time high. Yeah, simple, clear bias. Since I trade gold as well, where would I put my alert? I would put alert exactly at this fair value gap right there, this bearish fair value gap, and then wait. Then wait for what tomorrow will do. So any action that I'll get from this bearish fair value gap will be a go for me. If I get a sell, a strong sell in the daily, I'll take the sell. If I don't get a sell and I get, you know, a buy instead, I'll take the buy. Silver too would have the same bias. Only that there is no visible daily fair value gap on the silver. So I'm guessing the 4-hour would give you such. In the 4-hour, you have this swing high as your point of reference, not the fair value gap, your swing high. So now, if we get a run, if you know, picks up volatility, strong volatility up, we run it like that, we'll be coming all the way to either this point or this one, or if we get a sweep, this is what we're expecting, price to push, then come all the way here or into this fair value gap right here, so that we can get even more momentum to get up. But we have to wait. So I remember in earlier videos I mentioned the importance of waiting. This is where waiting comes in. You've marked up your setups, you wait. They won't play out immediately. In fact, some would take days to play out. So you wait, you do other things, you know, go to the gym, go to class, go to study, do some ABCs with your life, and then put alerts on the chart. And before you know it, things are working like that. I also said I would talk about crypto and indices, but I don't think I have time for such. But just maybe some other time I'll just explain what do I expect to see. Maybe I say the Dow Jones. So the Dow Jones is actually responding beautifully from this fair value gap. In fact, very beautifully. So maybe we would expect price to push above on the next day. So maybe we'd expect some good buys like that, or maybe it will fail. Maybe this fair value gap will fail, because with the current ongoing stuff affecting the stocks and whatever, the idea would be more bearish than bullish, but we shall see, because now it has responded from this bullish fair value gap. Maybe we may get some hope for price to keep going upwards. If we observe Bitcoin, Bitcoin would also communicate the same thing. In Bitcoin, we have a failing fair value gap right there. So maybe if price pushes into this gap here, we would expect price to come all the way towards this equal lows right here. Same as Ethereum in that manner. But Ethereum has less strength, so we see Ethereum is already closer towards this low compared to Bitcoin. So I trust Bitcoin for my setup. Minor pairs, we have now CAD CHF. I'll say something. So I have this tool. It's called the currency. What is it called? Yeah, this one. Currency strength meter. I usually, because now you see market is closed, so we can't tell anything. We can't say anything, but it shows you the strength of the currencies in time. So when markets are active, before I take a setup, after my analysis, I come observe what is stronger than the other. So you see at this moment in time, we have CAD and CHF. Not at this moment in time, at least before market open. When market was closing, we have CAD CHF and like CAD and the CHF closer in strength. So I wouldn't take this setup yet, but we see a beautiful bullish fair value gap right here created. And the only reason the CAD is rising in popularity, or it is rising in strength, is because Canada is a heavy exporter of oil, as well as US. And with the whole Iran-US conflict, huge oil exporters such as Canada are making more money in this, so causing the currency to increase in strength. I would expect price to push into this fair value gap, respecting it and going above. And if this fair value gap fails, then we have a bearish setup. EURUSDJPY. Now, you see the beauty of signal strength, because the Swiss franc is slightly stronger than the euro to some extent. This is what you expect to happen. The Swiss franc overloading the euro, causing an overall bearish trend. While compared to the Canadian dollar and the Swiss franc, you see that whole time of, market dump. You don't see as much market dump in the Canadian CHF compared to the Euro CHF, you understand, because of currency strength. That's why currency strength is such an important tool that is slept on. So at this point in time, what am I seeing at Euro CHF? I just put this chart here to show you the difference in, currency strengths, for example. So yeah, see the CHF being slightly stronger compared to the euro before market close, but maybe overall during those weeks it was strong. So that tells you something. If I see such, and if my setup aligns, then I take it. So I was just showing you how important it is to combine the tools. Well, I think that should be it. That should be everything. Yeah, I did talk about this. So I also have this sentiment tool that I use, but I'm not trusting this as much. So when the week opens, we would see how many people are usually taking setups, or certain directional setups. Now we have applications these days that post this data and they post it to the current meters, as current as possible. This one, I think it just winds up everything for the week and posts it. It doesn't update it as much. forex client sentiment, you can use this. So whatever I do is, if I see there's too much sentiment on one side, like for example, if more people buy, I assume, or the parameter gives you a sell. So for this, for example, we have more people buying, so the parameter gives you a sell. For this, we have more people buying, so the parameter gives you a sell. If I look at this charts in particular, and I see that I have setups, then this will be like my cherry on top, my icing on the cake. I would take this setup based on the fact that if I'm seeing a buy, or if I'm seeing a sell setup on a bearish sentiment pair, then I would take it, knowing that it would work. So it's like a combination of a couple of things. The page itself offers you such. I'll put a link in the description. You can go check the page for yourself and observe like that. So for this week, or for the coming week, we have USD being bearish, CHF being bearish. Now you see some of them would be a bit confusing, you understand, because they are opposing pairs. So you have to take this with a grain of salt. Make sure you observe you have setups. Make sure you observe you have setups in these charts at this moment in time. Yeah. So, and also I use Forex Factory for my news. Now, as I've said, wait, what week is this? Oh, interesting. Okay, when is today? Today should be the 8th. So this is the week. I was wrong. Yes, perfect. I was beginning to wonder what am I looking at, because on my laptop I'm looking at jolts for Friday 13th. I figured maybe I was wrong. I wasn't wrong. Anyways, these are the events we have in the week. I use Forex Factory for my news, and it's pretty much up to date, if you ask me. So I just sort out the news, the strong news for the week. So at least we have Monday with no news, Tuesday with no news, and Wednesday, Thursday, Friday. So these days would have spikes of volatility like that, and there would be very hard days to navigate, actually, because there's so much anticipation building up towards the USD, for example, or the pound, or the Canadian dollar. So I usually stay out only if I do not see my setups. You understand? Mind you, let me repeat this point one more time. I stay out when I don't see setups. If there is strong news like this, I stay out. I don't trade. If I have setups, and these setups are particularly going to play out because of said news, then I'd wait and see how the news causes these setups to respond. And if they do, I take them. That is how I do it. If it was on a prop firm, if it was on a prop firm, or if it was on my personal account. Like, news for me is just added volatility. My setup stands. Even though sometimes news serve to manipulate what the market is doing or what the market is showing. So you have to be quite keen when you're navigating news weeks like this. But overall, it's a pretty chill week. It's not like we have, very, very strong news, like, say, for example, the coming week. You get what I mean? So this week will be a very tough one to navigate, but at the same time, a very good one if you have solid setups aligned towards these news events. Yeah, so thank you for your time. If you've stayed all the way towards the end of this video, please pin a comment, write down a comment, and give me your thoughts. I would love to hear your thoughts about certain things. I'd love to hear your thoughts also concerning certain currency pairs that you want me to talk about. I know people have crazy ideas and crazy pairs that they've seen is volatile. Say, for example, the Australian dollar JPY pair. I traded that a couple, like I think last month or like January, and it gave me so much good money. And because it was showing a very good, you know, it was showing some good bullishness like that. So I know people have crazy ideas. See, yeah, there it is. We had a very beautiful weekly fair value gap respected right there. We had price push up, creating a new daily fair value gap, price respecting that daily fair value gap, coming all the way into this red is like a weekly bearish fair value gap. And in this weekly bearish fair value gap, we saw a beautiful respect. So I took the liberty of taking this respect, this respect of this weekly bearish fair value gap. Then now we see, I just closed out early. I think this was like a 1 to 2, yeah, 1 to 2 risk to reward. So almost stopped out even. So price kept going up. So I know people have, and this was, I just stumbled across this. I was like, okay, JPY was actually buying crazy. I mean, selling crazy. So I was like, let me take this. Took my 1 to 2, left it, and see now it's just going. So I don't know, maybe on a separate video or next time, maybe I'll analyze and then I'll show you like that. If you have ideas, if you have comments, if you have things to say, don't resist to, give a shout out, give a comment. Also, spare me a like, spare me a follow to generate, more traction to this lovely page where I offer free Forex education for everyone to learn and understand. I hope this video was impactful and helpful for you. Yeah, so see you on the next one.